Confused about mortgages and all the moving parts? In today's video, we dive into mortgage pre-approvals, what they are, how they differ from pre-qualifications, and why they are important, and how they can help benefit you and save you both time and money. Today's video was taken from our new podcast, Realty Bites, Conversations on Real Estate and Lifestyle. It's the podcast where we discuss all things real estate and lifestyle. In this snippet taken from one of our interviews, we talk about mortgage pre-approvals and why they're important when you're buying a home. Whether you're a first-time home buyer or an experienced homeowner, a pre-approval can make the home buying process smoother and more efficient. Today, we'll explore what a pre-approval is, how it works, and the benefits it can offer you. So sit back, relax, and tune in to our conversation. And if you enjoy this video, be sure to check out our podcast, Realty Bites, Conversations on Real Estate and Lifestyle. You'll find it on your favorite podcast platform. And don't forget to subscribe for more great real estate tips and information.
Now, the pre-approval is much more in-depth, and this is what people should actually be striving for. Here, you're going to provide all of the income documents requested by your mortgage professional. They'll actually go through, look at the documents, look at the application, check the credit scores, and make sure everything is in order. And from there, they should be able to provide a very fair and accurate assessment of what you'll qualify for. The only variable in that would be the property itself, especially if they haven't seen a property as of yet, because, obviously everything could be good with your income, your credit could be fantastic, but the property might have a giant hole. No lender's going to want to take that onto their books. So for the most part, pre-qualification is just a very short approval, doesn't really have any merit. Pre-approval is much more informative.
Okay. And so when they're pre-approved, you would tell them that based on everything that you've given me and that we've submitted, the lender is willing to loan you X amount of dollars, and we're going to loan it to you at this percentage interest rate. How long does that pre-approval last? Yeah.
So sorry. And thank you for reminding me, but with the pre-approval, we can actually do a rate hold. So that rate hold is good for 120 days. Some lenders are 90 days, some lenders are, 6 months, but for the most part, I would say 4 months. So that means as long as you purchase and you close by that rate expiry date, that rate is guaranteed to you. That's one of the huge advantages, especially in this rising interest rate environment. As rates are going up, you want to make sure you're getting the best possible rates. And you can only do so by starting your pre-approval as soon as the thought of purchasing comes into your head. And of course, if rates go down by the time you actually purchase and close, you're always going to be guaranteed that new lower rate.
It's a conversation that I always have with buyers. It's really important to have your pre-approval in place. And they, often will say, well, I'll get it when it's time. I'm good for the money. But it's got so many advantages to it. So you just went over a few of them. First of all, you know exactly how much money the lender is going to give you. So there's no surprises. You don't find the home of your dreams only to find out you're $50,000 short. You can't come up with that extra 50. Secondly, you get your rate held. It protects you if rates should go up. If rates should decrease, you're also protected because you would now get the new reduced rate plus whatever discount the lender was willing to provide you. And it gives you a strong position at the negotiation table. So think of it yourself. If you were a seller and you had two offers come in, and one was with a full pre-approval, and the other one, the buyer said, well, I've talked to my bank, I've been pre-qualified. That's an iffy kind of situation. The pre-approval is in writing. They've done their due diligence. They've had their credit pulls. They've had their income verified, their down payment verified. If you were the seller, which one would you put more merit to? If both offers came in at the same price, which one would you lean towards? Obviously, the one with the pre-approval.
Right.
And which buyer would have a stronger position to negotiate that price? Obviously, the one that comes with a pre-approval. So for so many reasons, it's really important if you're thinking about buying a house, whether it's your first house or whether you're upsizing or downsizing, but you still need financing, it's really important to have that pre-approval in place.
That's why we do it. We want to make sure that when the buyer goes in, they can put their best foot forward. And there's no surprises because, of course, generally speaking, once you get pre-approved, there shouldn't be. It should be a very smooth process from there on out.
Right. And in terms of the buyer, is there a cost for them to get that pre-approval?
Not at all. So we just collect all of the documents, and the pre-approval itself is very fluid. So let's say they can't find anything or they decide to hold off for that 120-day period. No problem at all. We might just update a few income documents and we can restart the process. It's very simple.